So earnings season is well underway. We've heard from some of the big banks already. We're going to talk about JPMorgan Chase's earnings, which looks like a pretty big winner of early earnings season. Before we do, please click subscribe to my channel if you haven't done so already. And please check out the link you see on your screen for a message from my sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So the headline numbers, JPMorgan Chase beat expectations on both revenue and earnings. But there's a lot more to the story. The numbers from the bank all over just look pretty good. Return on equity was 18% versus 13% a year ago. Its efficiency is way down. Lower is better with bank efficiency ratios. On net interest income, the bank saw a 49% year over year increase in net interest income. And not only that, but its interest income guidance for the full year of 2023 is $7 billion more than experts had expected. The stock gave its biggest upside movement on earnings in about 20 years after the report. It shot up 8% right after earnings. That's a pretty big move, and for good reason. Um, the bank is also seems to be one of the few beneficiaries of the recent turmoil in the regional banking space. A lot of businesses especially, but a lot of depositors have been pulling money out of smaller institutions. And when it comes to perceived safety, you don't really get much better than JP Morgan Chase. So big bank deposits have been dropping for over a year now, and for good reason. The big banks aren't exactly known for paying high yields on savings accounts. My Wells Fargo account pays, I think, 0.01 still, but they are safe. So we've seen deposits kind of tick down. JP Morgan Chase's deposit base declined 7% over the past year. But unlike most of the other big banks, it is up 2% since the end of 2022. And a lot of that is the big influx of deposits it saw after the SVB collapse. The JP Morgan Chase now has $2.38 trillion in deposits. Even consumer deposits grew, which I mentioned a lot of the inflows are business deposits, but even consumer deposits were up. That is not what we saw from Wells Fargo. So that is a big standout right there. Um, Investment banking is understandably weak. Not a lot of companies are going public, issuing new equity, things like that right now. No mergers happening for the most part. But trading was very strong. Fixed income trading, which tends to benefit from interest rate volatility, was extremely strong. The company started buying back stock again, a little under $2 billion spent on buybacks during the quarter. And the bank said it saw, quote, significant new account opening activity. So that's a very positive sign. We'll have to see how the rest of this year plays out. We're still heading for a recession in all likelihood. But for the most part, JP Morgan Chase's earnings look very, very strong. And it's going to be tough for any of the other banks to really beat them. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.